The sound is slightly off. I'm doing this remotely this morning. A little bit of a blizzard in the Northeast started early this morning. So market made a new all-time high yesterday. We start the year off pretty strong. I just want to take a step back and look at the big picture for a minute. So if we go back to, let's just keep on going back. All right, so there we go. All right, so if we go back to 2013, which was a really strong year for the market, which is right here, similar kind of in size to 2017 percentage-wise. But one thing that was different, especially recently, as we got above 250 on the SPY, was 2013 was in the first part of the year, you kind of had this straight up without a pullback, and you had a little pullback before consolidation, but you then had really nice 2 to 3 day pullbacks every month, 6 weeks or so. So there was money to be made on the resets, and I thought 2017 that we would see something similar, but we didn't really. I mean, we pulled back a little bit a couple times, but we didn't really have the kind of follow through on a percentage basis that we saw back here. But I'm thinking we've run enough now. Things are really starting to accelerate to the upside that there's a better chance we could see that this year. So obviously market's in a cleanup trend, secular bull market, but I'm hoping that these up moves are starting to accelerate, and then we're going to start to get these, every 4 to 6 weeks or every 2 months, decent 2 to 4 cent pullback, 2 to 4% pullbacks, which will help us kind of create some extra opportunities intra-year. But buyers in control right now. We're gapping up a little bit this morning. Let's take a look. So we got above 270 yesterday, peaked out here at 270.60. We're gapping above 271. So any selling after 2 days of buying, if we get a little seller pressure today, this area from yesterday, 270.50, and then if we came in below that, 270 would be the natural support. All right, let's take a look at IWM. So IWM in the morning yesterday, we got above the 54. We came back down below. Tested 53.5 for a few minutes and closed above 54, gapping higher this morning. So that should put us, does that put us in an all-time high? Let's see here. 55.30. All right, so we're 155 in the pre-market. So this, small caps are underperforming. Absolutely, money flowed into large caps the last couple of days, but we're still, small caps still behind. So we'll watch this area right here this morning. Does it move up to the all-time high? Does it come back down and test 55 and hold above it? Or does it come back down and slice through 55 and start to hold below? That would be the key to watch on IWM. All right, let's start with Tesla. So after the close, they reported below expectations on the Model 3 deliveries. They lowered the ramp schedule for 2018. So remember, starting a year or more ago, 2018, they said they wanted to try to get to 500,000 cars delivered all across their models. It's looking like there's no way they're going to even come close to that. I'm not sure what these revised numbers on Model 3, what it brings it down to, but maybe it's in the 300,000 to 400,000 range. Things go okay for them. So really the question is this enough of a disappointment? I guess we'll see over the next few days to get this thing to kind of reverse the breakout that happened a while back. So let's go to the daily on this one. So, and again, this was a very long period of consolidation. We've covered this a bunch of times already. It broke out above 285, went up $100. It was a very good breakout. And since then, it's started another consolidation. So this is for 8 months. So 8 months since it broke out. It's kind of the top of the range. Here's the bottom of the range, around 300. And so this morning it was gapping down to like the recent support. So not quite to this 300 recent support, but more like here. So just look at when this, it looks really weak. It came off from 380, spending all this time down here at 300. It failed to break out above 320, comes back down, does the retest at 300, and then like a rocket went right up to 340 and change. So it's basically, and this is something you can take advantage on the option side. When this thing gets down to like 300, 305, going 2 weeks out on the options and buying like 320s is a good bet. And you can kind of see how that kind of played out here last time we got to 300. Had that $40 rip to the upside. Let's take a look. All right, so it got to 305 here in the pre-market. Looks like 310 is going to kind of be the spot to see if buyers can regain control. So I'd call this area here between like 310 and 312.5, a little bit no man's land. An area where it can pop up and fail and get a retest of the lows, or even come into the 302 to 300 support area. But basically, the way you want to think about this is if this area holds here, the pre-market low, and it comes into above 310 and consolidates and breaks above this 312.5, 313 area, you don't really want to short it. You want to look for the momentum to take it back up to 317, 318 in this area right here. But right now, the seller's still trying to like regain control. I shouldn't say even regain, but this was support in the after hours. Now it's acting as resistance. So just don't make low percentage extra trades, not off of big support and resistance areas. Because you really need to risk $1 when you're trading this, $1 to $2. So you want to be in good areas where you can potentially make $5 to $10, or at a minimum $3. So you want to be selective. So this is the pre-market action. You can see after the initial drop down to 305, buyers stepped up. They saw that it held there. Buyers stepped up to 306. Even on this volume spike here, somebody was willing to hold it here at 306. Volume spike, then ripped up to 310. The seller, so they're willing to sell here. So we have a little bit of a $4 range to work with coming into the open. The next one is LB. So on this one, I didn't really think there was much. I didn't see much in terms of why it would be down this much. But if we look at how much it's run up since the lows, that's a little bit more of an explanation. So then this one had a tremendous move off of the lows. So it spent a couple of weeks down here just being accumulated at 36, went back up to 40, came back down, did a little bit of a retest, and then consolidated above 40 for a while, and above 43 for a while, and then just really took off. It was in this channel, riding like kind of the top of the channel here. And so going with that theme of I didn't really see that much in terms of downside guidance, you would think that buyers would step in here. It'll be interesting to see, actually. You have this 55 right here. So it spent the last month above, was bought here. So this 55 is interesting. Does it pop up to 55 and get sold here and kind of form a little bit of a support area? Or does it actually just rip right back up? So what did I put in the notes? Yeah, I mean, there was a very slight guide lower. I guess, on the daily, it's Actually, a daily, look at the daily, just you can see that. All right, so yeah, they crushed this thing. It was 65% off the high. It broke this downtrend and gapped above, got back above 50, which was, this was clearly one of the last pieces of bad news. This right here in July when it gapped below 50, that was the final. And had the final gap down to the lows. So maybe it does want to tag this 50. Zoom back in. When I say tag this 50, meaning they need to like flush anyone who's buying the dip in the pre-market or on the open, they need to flush it all the way down to 50, and then they can rip it back up to $53, $54. So that's going to keep that in the back of my mind for when the market opens. But right now, just zooming in on it, it's done good volume in the pre-market. Let me just, what's the, check something here. Yeah, the float, there's not, about 10% short. It's not a huge short compared to some of the other names we're going to look at. So they bought here at 51.5, and now they're stepping up to 52. So the buyers are definitely starting to take a little bit of control here now. It's traded about 8% of its daily volume already in the pre-market, 340,000 shares. So buyers are starting to take control here. What do I have for the first? Yeah, 50 foot. There's the resistance is up here, so you really want to just, if you did get long with it, long in it, and you saw it stabilizing and holding 52, you want to give it a chance to bounce here. The initial gap down, it held below 53, so that will be our next clue. Does it come back up here and fail and get below 53 again? That's what I'll be watching. Roku. So Roku had a great up move yesterday, and then they caught the downgrade from Morgan Stanley this morning. What I like about this is, it just shows you how strong something like this is. You look at it, it comes down. It's obviously had this big move here up to the high 50s. Major lower high came down, looks like it's going to roll over, and then the next day they just rip it to the upside now. I thought the news that got it was the catalyst was a little bit of BS, but it just shows you how strong it is. The news was they're going to add an assistant to their devices, kind of the way that you can use with Alexa to tell it what shows you want to watch, or the Google Home. But anyway, went straight up on the open to 55. Ended up taking out this resistance here, 56. Topped out 57.5 or so. So this morning with the downgrade, it looks like they want to retest support area, which is fine. They've already done that. And then we want to see if it bounces off there, probably back up to 53.5, 54 or so. And what's our volume here? So this one's done 360,000 shares, and this one even has a larger short float. This has 33%. Which I know they're looking at the numbers, and I get it. Makes sense why they're shorting it, the hedge funds. So remember, 50-50, it held that the other day, and so a flush down through 51 on the open, anything close to $50, it's worth picking up a little bit and seeing if it can bounce $1 or $2 off of that 50 area, 50-50, stabilizes, then we'll go from there. But certainly there's a lot of people short this, getting a Morgan Stanley downgrade. I'm sure some of them will use it as an opportunity to cover some of the positions. And CMCM. So this one has a ridiculous short float. It has a 70% short float. So I'm not sure. I didn't really see any news on it. It's obviously there's something going on here because it's gapping up huge. But it was down to $10 the other day. They ran it up to 12.5. It was weak yesterday. Now some people probably caught it like shorting it here, maybe shorting more on this failure here, and now it rips. It's gapping above this pivot high above $13. This could be interesting. If anybody saw the news, you could put it into the chat window there, or in the real-time chat. Let's check out the daily. Actually, you can see last time I guess we were talking about it, I drew some stuff over here, huh? So, right, so they rounded up to 13 here, next day it fell there. I mean, so it's a big deal. So, I mean, the first thing you want to look for is, does it come into 13 on the open? You know, are people buying it there, 13 or a little bit below? And then does it get back above, let's say, 13.20? It's 70% of the float short is just so dangerous for people being shorted. And that's the history. We like to go when we zoom out on a daily and we see something this shorted, and we know in this environment we've seen some crazy stuff to the upside. 13 is important, but once it gets above 14, there's not really much. $16, $17. Maybe we'll get another one of these crazies where it closes here, it gaps up here tomorrow, and then we get the pullback. So. So 14.25 pre-market. I guess they're buying it here at 13.40, 13.50. So we have this right here, support, and this is the area from the daily right here. And our resistance area is going to be 14 to the pre-market high. We're just going to play off of these price levels. If it breaks through either side, then just stick with the trend. Let's move on to second day. So Intel, which I thought worked out pretty well on the open for us yesterday, was pretty easy, long trade. And then I wasn't around for the craziness in the afternoon. I was in meetings. So bought it on the open, went straight up, flipped it to the short side, and then played this range. I was on the desk for this basically. So I was trading it long when it came down into the 60s, and then flipping it short in the 90s, and that worked for a while. It was pretty good. But clearly, if you stuck around and the volume came in, it broke below 45.5. If you were shorted into the morning low, this made sense here. Then looking to see if it would support at 45 also made sense. Now clearly, it once something comes down to this 45 area, goes through and spends more than 10, 15 minutes down here, you have to start thinking, okay, this site might actually have another down leg. You want to see what you kind of saw in the open if you're getting long this is kind of best case. Like it goes to the area and it just, like a rocket, shoots right off of the support area. But once something starts to consolidate for more than a few minutes, let's say more than 10 minutes, especially after 10 a.m., after the open, at support, and then support starts to become to resistance like it did here on these 3 tight bars and breaks down. This is a screaming short, and you can hit 50,000 shares in Intel. That's how thick a stock it is, with 1 or 2 cents of slippage. So there's no reason not to, if you're playing the support play here and thinking it could bounce, there was no reason not to flip it to short once it broke below the low here, and then it just accelerated. I would imagine people then played it on the long side. I mean, this is really accelerated to the downside. You got a retest to the low. It held here, tight consolidation against the low, and then it broke to the upside. And this is a little bit different than, when you see something consolidating here against 45, the first support, this is the way I look at it. Some traders will look at it a little bit differently, but they'll be like, okay, it's comes back up, it's not bouncing, it's consolidating at the low again. Yes, that's true. Yes, the sellers are in control, but the risk reward in a stock like Intel, which has an 80-cent range, when it's now down another 1.5 ATRs, the risk reward is not particularly favorable on the short side here. So you have to be really careful of not getting caught. I mean, this clearly some sort of news broke here and the volume came in, but you don't want to make all this money short all the way down from 46, and then you hit it below 45, then you get greedy here and you're not long, or you don't cover your short immediately, and it rips up 1.5 points. You don't want to give money back that way. It's painful. So this morning it's gapping down. I think the more widely the news is being disseminated, this is bad stuff. I even saw a technical technology writer saying Intel was going to have to recall all their chips. I kind of find that hard to believe. But it's right now, it's weak. But we have this clear area from yesterday, 43.70s. Then let's say, call it 44.50 would be the first kind of area where I'd want to watch to see if buyers can step in again to retake control. Now, if we look at this on the daily, obviously the rest of the market it's run up a ton. So yeah, it very well could fail at yesterday's low and come in and test this daily support, which would be about $1 below yesterday's low, I guess. Did I put that on the sheet? 43. So that's this right here. There was obviously a big gap up on earnings here on October 27th. So we can look for a retest of the post-earnings low right here if it takes out yesterday's low. We're getting late, so let me just quickly move on. RENN, I think I called this out in the morning when I saw it flashing on my screen around 14. I didn't know that it went completely vertical in the afternoon, but certainly it got above 14 in the morning, consolidated, failed at 15 a couple of times. I could see people probably shorting it on the second failure here. But then it took out the morning high and went up $4 or $3.50. So that looks like kind of a blow-off-ish type high. It's already $2 off the pre-market. So I would say maybe on the open, they flush it down to 16 to 16 and a half, and then look for it to kind of crawl its way back up to $18, something like that. And then finally, VRX, I thought people did a nice job, called it out. It was very similar to Intel. It was an easy long on the open. They dropped it down almost to 22. You can see the kind of the wicks there on the 5-minute. People were buying it in front of 22, and they ripped it above 23. That's kind of the move you would look for. You got your retest of 23. It did make a lower high here, but never rolled over, even though it made another lower high. It just basically was accumulated at 23 all day. So it still looks pretty good for a move to 24, 25. That is it. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.